All right, thanks guys. Thank you for participating today. My name is Tony Zhang. I am the chief strategist here at OptionsPlay. And today we're going to be talking about trading your first option. This webinar is geared more so for those of you that are relatively new to options trading, but if for those of you that have traded options or have some experience trading options, you will also learn some things in regards to how to potentially make your process for trading easier and more efficient. We're going to go over everything from researching the underlying stock to how do you quickly identify trading strategies using OptionsPlay. Before I get started again, I just want to do a quick sound check. Can everyone please just type in yes into the chat window if you can hear me? Okay, great. Looks like everyone's on board here. Great. So today, what I'm going to do is I'm going to spend just about 10 minutes going through some slides, showing you some of the things that we'll go over here. We'll talk a little bit about the basics of options trading. We're going to cover two of the most popular strategies for beginners to get started, buying calls and puts for those of you that are speculating on direction, and selling cover calls for those of you that are looking to generate some income. And what I really want to make sure that everyone understands is how to use our platform to simplify your research, simplify your life. I don't want to make your lives more complicated when we look at trading options. So what we're going to do is we're going to spend about 10 minutes going through some of the slides, going through some of the concepts so that you understand the terminology before we get started. And then what I'm going to spend is about most of the time we're going to spend it using OptionsPlay, which is a platform that all of you have access to free of charge through the Toronto Montreal Exchange that allows you to quickly look at these strategies and identify trading opportunities for any stock or ETF. So that's what I really want to spend most of my time on, is showing you guys that actual platform from the things that we learned using the slides today. So we'll cover all of those things, including for those of you that are new, we're going to talk about how to avoid some costly mistakes, especially as a beginner. We want to make sure you understand those mistakes so that you can hopefully avoid them as a beginner. Now, before I get started on the slides, I'm just going to launch a quick poll here. You should see a poll pop up in front of your screen. Just please answer that poll so that we can get an idea as far as who's in the room here. Okay, great. So looks like 2/3 of you have voted already. So it looks like 2/3 of you have traded options before. About 1/3 of you are relatively new, which is great. I'll cover this for everyone. Whether you're brand new to options trading or you've been trading for a while, I'll cover kind of what to look out for. So great. I'm going to end this poll right now. Thank you, everyone, for participating. So as you can see, about 2/3 of you have traded options before, and 1/3 of you are brand new and learning, which is great. Let's go ahead and get started here. For those of you that are brand new to options trading, what I'm hoping that this webinar does is I hope that it inspires you to take a look at options trading. So especially if you're brand new, options trading is not something that you learn overnight. It takes time to learn, and sometimes that process can be overwhelming and daunting. So that's one of the things that we want to do, is show you what are the new methods for learning options that can make it a little easier for you, and that's what OptionsPlay is designed to do. So I hope for those of you that are brand new, this inspires you to take a look into options deeper based on the things that you learned today. And because since 2/3 of you are currently already trading options, what I'm really hoping for those of you that have traded options will learn today is showing you how to make your process for finding trades and finding option strategies as simple as and efficient as possible. So we'll go over all of that today. So what I'm going to cover, number one, is 2 basic strategies buying calls and puts for those of you that have bullish or bearish views on an underlying stock and how to take advantage for that, and then cover calls for those of you that are looking to generate some income on the stocks that you own in your account, which is one of the most popular strategies for options trading. Then I'll cover a little bit about what to look for when you're doing your analysis on the underlying stock. It's important to understand what to look for when you're trading options. So I'll cover a little bit about that. And what I want to cover also for those of you that have traded options for a little bit is understanding the Greeks, and only from a conceptual standpoint, because the Greeks is something that tends to scare off some people because there's some Greek terms in there, you know, pun intended, and there's some math involved. So what I really want to do is show you how you can actually learn the Greeks without having to be scared away by terminology or even having to do any math, because our platform does all of that work for you. Lastly, what I'll do is I'll cover some of the common mistakes that people make when they're starting out with trading, so hopefully you guys can avoid some of those. And lastly, like I said, what I want to do is spend most of our time showing you how to use OptionsPlay. Again, this is a platform that's free of charge to you guys through the TMX, so I highly recommend you guys to take a look at that. That's the platform that I'll use today to show you guys how to apply the things that we're going to teach today using OptionsPlay, so that you can quickly, after this webinar, feel confident enough to start using these tools and start trading some options. So let's just start with some of the basic strategies, buying calls and puts. So the buying calls and puts is the simplest strategy that you can use if you have a bullish or bearish view on a stock. And it's very simple. If you have a bullish view, you would buy calls. If you have a bearish view on a stock, you would buy puts. These are the two basic strategies that you can trade using options. And I'll go over some real life examples using some stocks in a second, using OptionsPlay to show you guys how buying a call or a put differs from trading just the stock itself. Generally speaking, if you're buying calls and puts, for the most part, if you have a bullish or bearish view on the stock, you're generally going to look at expirations that are about 1 to 2 months out, because that's primarily where most traders are trading, is they have views that are anywhere from 1 to 2 months out. So they'll trade expirations 1 to 2 months out. And in terms of what strike prices to use, especially as a beginner, you generally want to stick with strikes that are near the current price, or what we call at the money strikes. Okay. So when you're thinking about which calls to buy or which puts to buy, and you're trying to figure out what expiration and strike price, make sure that you stick to around 1 to 2 months out in terms of expiration and at the money strikes, especially if you're starting out. And don't worry, this webinar is recorded. So for those of you that are hoping to come back to this and review some of this data, you'll be able to get the recording after we're done, so that you can view this video as many times as you want to review the information that I'm going over today. So that covers a very basic, what to do if you're bullish or bearish on an underlying stock. You can buy a call or you can buy a put. Second most popular strategy for beginners is cover calls. This is a strategy that you can use to generate income on the stock positions you already have. And that's why this is probably one of the most popular strategies for beginners, because many of you already own stock in your account. And this is a great way to get started with options without adding any additional risk to your portfolio. You can generate some income in your portfolio by selling a cover call. The only requirement here is that it requires at least 100 shares of stock in order to sell one contract of a call to generate income. So if you have some stocks that you only have maybe 50 shares of, you can't do this strategy. It has to be on a stock that you own at least 100 shares of. And lastly, you do risk losing your stock. So if that becomes a taxable event, something to consider, that there is the risk of losing that stock if you were selling a cover call against it for income. So talking a little bit about stock analysis. So when you're trading options, it's very important that you don't focus on the option piece first, you focus on the stock piece first, because you must first have a view on where you think the stock's going to go before you look at any option strategy. So it's really important to understand what direction you think the stock's going to head into, because that's going to be the most important factor in helping you determine what strategy is suitable for you using options. So you either have to first have a bullish bullish, bearish, or perhaps even neutral view on the stock, but you must first have that view. And there's many different ways to do that, right? You can use the charts to determine whether you're bullish or bearish. You can use fundamental analysis. You know, many of you may use other types of analysis like seasonality. Whatever it is, just you must first have a view on the underlying stock. The second most important thing is you must have an exit plan based on the directional view you have on that stock. That means that if a stock's trading at 100 and you're bullish on it, you think it's going to go to 110, have an exit plan that says if the stock hits 110, I'm going to get out of this trade. It has nothing to do with the option trade itself. You should have an exit plan based on the underlying stock, because if you're bullish on the stock, you should have a target price on the stock. And if you're wrong, if the stock goes down to $95 or $90, that's when you can say, hey, I'm wrong on this trade and get out as well at a loss. So make sure you have an exit plan on both sides, regardless of whether you're bullish or bearish on an underlying stock. Lastly, I tend to tell beginners who are starting out, stick to using in the money strike prices when you're first starting out. So, you know, just right around the current price, maybe slightly in the money. These are the types of strike prices you typically want to start out with when you're looking to buy or sell. When you're looking to buy a call or a put. So I just want to cover a few different types of analysis because many of you may have different views on how to do your analysis. So when you're looking at technical analysis, typically these are more shorter term trades. You're looking at charts that, you know, these are swing trades that last anywhere from a few weeks out to a few months out. These are the types of strategies that you would typically trade expirations that are anywhere from 1 to 3 months out. So, you know, when you're looking at charts, you generally aren't looking at really, really long-term charts. So most of the moves that you expect from a chart, you expect them to move in a relatively short period of time. So you want to pick an expiration that matches that time frame. For those of you that are fundamental analysts, so for those of you that are looking at balance sheets, income statements, things like that, financial reports to determine whether you're bullish and bearish on a stock, this is more longer term views because these types of analysis do not play out within a few days or a few weeks. They tend to take months, if not quarters, to play out. So for those types of traders, you want to stick to expirations that are anywhere from 3 months to 12 months out. So make sure you pick an expiration date that matches your type of analysis. Don't choose one that doesn't fit. So if you're doing technical analysis, you generally lean towards shorter term expirations. If you're doing fundamental analysis, you generally want to lean towards longer term expiration dates. So I want to cover a term that you know many of you may have heard about, but you know sometimes is a little confusing, and sometimes there's math involved, and that scares off a lot of people. But I do think it's very important to understand two major concepts of option pricing, because when you're trading a stock, it's really easy to calculate. For every dollar the stock goes up, you make $1. For every dollar the stock goes down, you lose $1. So it's very straightforward. When it comes to options, it's not as straightforward. So there's two things that we all need to look out for. There's delta and there's theta. Delta refers to the change in the option price with respect to the change in stock price. So if you buy a call and the stock goes up by $1, your call is not going to necessarily go up by $1. How much is it going to go up by? That's what delta tells you. So if you have a call of a delta of 0.05, that means for every dollar that goes up, the stock will go up 50 cents. Now, this is where I tend to lose some people when we start talking about these calculations. And one thing that I want to make clear is once I show you the platform, you're just going to have to know this concept. You don't have to do any of the calculations yourself because our platform actually does all of that work for you. It's just important to understand that the stock of the price of the option does not move one for one with the price of the stock. So delta just tells you how much you should expect the option to increase or decrease by for every dollar the stock goes up or down by. The second thing is theta. This is a very fundamental difference between trading stocks and options, is that when you're trading stocks, you can hang on to that stock for as long as you want, whether it's for a few seconds or a few years. There's no difference in terms of how long you hold on to it. That's not the same for options. Because options expire, the price of the option will actually change just with time going by, even if the stock doesn't move. And how much does the option price change based on time, that's what theta tells you. So this is what we call time decay, because if you own an option, the option will actually decay in value as it gets closer and closer to expiration. So it's really important to understand how much money are you going to lose if you're long the option, and how much money are you going to gain if you're short the option. And that's what theta tells you. And again, you don't have to memorize this. You don't have to know how to calculate it. Our platform does all of that work for you. It's just important to understand that these are two concepts that are vastly, fundamentally different between trading a stock versus trading an option. So let's just cover a few of the common mistakes that people find when they're typically trading options. And what I want to do is split this up between users who are buying options. So if you're speculating by buying calls and puts, and if you're selling options such as cover calls. So if you're speculating and you're buying that call or put, meaning if you have a bullish or bearish view on the stock, one of the most common mistakes that people make when they're buying a call or a put is they hang on to the call or put until expiration. When you're buying an option, you typically want to get in and out as quickly as possible because of the theta that I just referred to. Because as the time goes by, your option will actually lose value as time goes by. So you want to place your trade, and if the stock moves in your direction, get out, take your profits. And if the stock doesn't move in your direction, or if it goes lower, also get out, because you don't want to get stuck hanging onto an option that's constantly eroding in value. Okay, so typically when you're buying a call or a put, you want to enter a trade, and as soon as the stock either hits your target or misses your target, that's when you want to get out. You typically want to get out about at least 1 week before expiration at the most. You want to exit that trade before it actually hits that expiration date. Secondly, one of the most common mistakes with people buying calls and puts is they use expirations that are too short. Meaning, if you expect the stock to move, 10% in a month, a lot of people what they'll do is they'll just trade a 1 month option. What that means is that you're not giving yourself enough time for any error. So, meaning if the stock makes that 10% move in a month and a half, you're not going to be able to take advantage of that because you only purchased a 1 month option. So you typically want to go out at least a couple of weeks beyond your time frame. So if you expect a move to happen in 1 week, you want to buy a 3-week option. Give yourself a little bit of time in order for that trade to be successful. So don't just trade a time frame that matches your expected move. Usually go out a couple of weeks or a few weeks longer than that when you're choosing your expirations. And lastly, the most common thing that I see across traders that cause people to lose money with trading options is not having an exit plan. So, someone will say, I'm bullish on this stock at $100. They buy a call and the stock goes to 103, 105, 107. They don't really have a plan as to when they're going to take profits. Or if the trade goes against them and it goes down to $95, they just end up hanging on to this trade and hoping the stock comes back. That's really one of probably the most common mistakes that we see with buyers that are buying calls and puts is not having an exit plan. That's one of the most important things to have when you enter a trade, is having an exit plan, both for the stock and also on the option. So if the option increases in value to a certain percentage, getting out and taking profit, or if the option loses a percentage in value, getting out and cutting your losses. So that's one of the most important things. Now, when it comes to selling cover calls, selling options. So this is when you're selling a call against some stock that you own in your account. The most common thing that we see is people get too aggressive with their cover calls, meaning they're just simply selecting strike prices where they're getting a lot of income, because everyone wants lots of income. But what you're doing is that you're limiting the upside return of your stock when you're selling a too aggressive call. So that's really why we want to make sure that you generally want to sell calls that are a bit more conservative when it comes to selling cover calls. And we'll show you that in 1 second as to how to actually select the appropriate strike for yourself when you're selling cover calls. This tool does all of that work for you. The second most common mistake that we see people make when they're selling cover calls is they're going too far out. This is the exact opposite of the mistake people use when they're buying options, is they buy too short of an expiration. When people sell options, they tend to go too far out. They might go 3-6 months out because they see that there's a lot of income to receive in a 6-month option versus a 1-month option. But that's actually also a common mistake, because when you go 6 times further out, you're generally not receiving 6 times as much income. You might only be receiving 3 times as much income. So that's why you generally, when you're selling options, you want to keep those to relatively short dated options, usually 1 to 2 months out. You don't generally want to sell options much further out, because there's so much uncertainty, especially when you're selling a 6-month option. There may be 2 earning cycles built into that. That's just a lot of uncertainty, and you have no idea what's going to happen between now and expiration. It's not worth it to go that far out. So you generally want to keep your expirations shorter term, 1 to 2 months. And lastly, when you're selling covered calls, same thing with your buying options or any trade, it's having an exit plan. Knowing what to do in different scenarios when you're selling a covered call, even if the stock goes higher, if the stock goes lower, or if the stock stays sideways, knowing what to do in each one of those situations before you get into a trade is the most important thing you can do for long-term success for each one of these strategies. So I don't have enough time to get into some of the details for some of this, but that's why we have separate webinars on these 2 trading strategies specifically. This is more of an introductory webinar to give you an idea as far as what are the things to look out for when you're starting out. So I do recommend, for those of you that are interested in these 2 specific strategies, we've already done pre-recorded webinars on some of these strategies, and we'll be doing more in the future. So make sure you either look out for that on our YouTube channel, or make sure you sign up for future webinars when we cover some of these topics. So now that I've covered the things that I wanted you guys to understand and just be aware of, what I really want to do is spend the time using our platform to show you the tools that we've built to help you do all the things that we've just shown you here today. So for those of you that have never seen this before, this is OptionsPlay. This is the tool that's available to you free of charge when you sign up for through the TMX. This is a tool that covers all Canadian stocks and options, that allows you to quickly look at trading strategies as well as help you do research on the underlying stock. And what I want to point out, especially for those of you that are new and for those of you that have been trading for a while, is compare that to looking at this page. For those of you that have been trading for a while, this is a page that you're probably very familiar with. And for those of you that are new, this might be a little daunting in terms of how do you select the right expiration? How do you select the right strike price? And even if you know how to select the right expiration and strike price, how do you do comparisons? How do you compare buying a stock to buying a call, or buying a call to a call spread? Or how do you compare one expiration to the next expiration? These are all the things that it's difficult to do when you're looking at the chains, let alone sometimes you end up picking a strike, doing some analysis, and decide, you know what, that's not the right strike. And you go back to the chains and you pick another strike, and you still quite aren't sure if that's the right one, but you kind of forgot what you did on the last one. So there's just a lot of back and forth. And what we really wanted to do is create a platform that takes all of that away from you and presents ideas in a more visual format, and really allows you to compare strategies side by side so you can definitively know which strategy is best suited for you. So that's what I'll give you guys a quick tour of today. The platform itself is divided into 3 sections. We have trade ideas and watch list here on the left. We have our security analysis in the middle, and lastly, trading and income here on the right. We call these 3 panels the what, why, and how of stocks and options trading. Because when you're starting out every day, you want to know what symbols should I take a look at. So we have trade ideas that are fresh for you, that are sorted by bullish and bearish ideas that you can look at every single day, that you can sort and filter by and look at different new symbols every day. You can also have a watch list. So we have pre-built watch list here for you with Canadian stocks in there, but you can always create your own watch list if you'd like. And once you click on any symbols, any stock in your watch list, or just type it in here in the middle, it'll populate the rest of the screen here. So we'll start with just the security analysis panel. Let's take a look at this stock, this wheat stock. And I'm only using this because this is the stock that everyone's looking at. This is probably one of the most popular stocks that people are looking at. So let's just take a look at this. What I want to do is show you how our security analysis panel simplifies the research for you so that you can have a methodical approach to determining whether a stock is in a bullish or bearish phase instantly for any stock or ETF that you type in. So one of the things that you'll notice for any stock that you type in, you'll get a 1 month and 6 month trend indicator. That tells you how the current short and long-term trend of the stock is currently performing. And you can actually see how that trend indicator has changed over time. So as you can see here, it only turned bullish back here on March 5th, just as it broke above a resistance level. So we actually show you where that next support and resistance level is on your chart so that you can easily not only see it, but visually see it on your chart. It'll tell you the price and the stock, how far the stock needs to move in order to hit that next support or resistance level. It provides things like earnings, dividends, and price action data here at the bottom. So especially for those of you that are trading options and familiar with making sure that you're checking for earnings and dividends, we wanted to place all of that data for you on one screen. And lastly, we have what's called the technical score. This is a relative strength indicator which allows you to quantifiably know, is this a strong stock compared to the overall market, or is this a weak stock compared to the overall market? And as you can see on your watch list, there's a score here. That's this relative strength ranking. So you can know that weed is a very strong stock because it's got a score of 10, very strong. Conversely, if I can find a stock here like Enbridge, which got a score of 2, this is a relatively weak stock in the overall market. As you can see based on the chart, you can clearly see that this is the stock that's underperforming the overall market. So between these two indicators alone, using the 1 month and 6 month trend and the technical score, you have a pretty good grasp for any stock that you type in, what the relative strength and the trend of that stock is. This provides a little bit of analysis so that you can quickly identify whether you think a stock's going to be in a bullish or bearish phase. Generally speaking, at least for me, and this is not necessarily saying what you need to do, I like to buy or look for bullish candidates within strong stocks like this, and I like to look for weak stocks like ENB if I'm looking for bearish strategies. So these are the types of analysis that we provide you that help you quickly gauge whether a stock is in a bullish or bearish trend very, very quickly. So let's just go back to wheat here real quick. For any stock that you type in, you'll see 2 buttons here at the bottom. One says I'm bullish, one says I'm bearish. This is designed so that we can present strategies to you without you having to pick anything first. And I think that's really one of the fundamental problems with using the option chain, is that regardless of what your views are on the underlying stock, you have to first pick a starting point. So if you're brand new, a lot of times you don't know where to start. And even if you have traded an option before and you have some experience trading options, it's not always easy to know exactly which strike price to choose. Nothing on this chain really makes it that easy for you to quickly decipher which strike is better than another or which expiration is better than another. So that's why we wanted to create OptionsPlay. So what we wanted to do is present starting points for everyone without you having to pick anything other than simply saying I'm bullish or I'm bearish. So here I've clicked on I'm bullish for wheat, and what it does is it presents me 3 strategies here. These 3 strategies represent the 3 most popular strategies amongst option traders on how to take advantage of a bullish or bearish move on an underlying stock. So here I have on the left the most simple strategy, which is simply just buying the stock. So if you're bullish on a stock, you can always just buy the stock, and that will allow you to take advantage of the stock goes higher. Next to that, I have a simple call strategy. This is the simple call strategy that we're talking about, the simple option strategy, buying the call. And we put the 2 side by side so that you can make this comparison. This is something you couldn't do from just looking at the option chain. And lastly, for those of you that have traded options for a while and looking for something more complex, we're showing you a spread here on the right. So this is a more complex multi-leg option strategy that has some additional benefits to trading than just buying the call. And this helps you progress from a trader, from someone who's just trading stocks to trading your first simple option strategy, for those of you that are trading more advanced strategies, to take a look at trading a more complex option strategy. And we put the three side by side so that you can compare them and say which one's best suited for you. And we've already picked the strike prices for you because these are good starting points for anyone. We're not saying these are the best strike prices to trade because there's no such thing as best strike prices, but this is a good starting point for everyone. Whether you're brand new or if you're trading options already, this provides that starting point. And what we do is we provide tools to help you quickly identify which one of these strategies is best suited for you. So Canopy is trading at 32.49, let's just call it 32.5. And what we do is instead of trying to calculate delta and theta and how that affects your option prices, we do all of that calculation for you. You just have to tell us where you think the stock's going to go. So if you think the stocks are going to go up to this, let's say 37 resistance level here, you can type that in and say, I'm bullish on this stock. I think it'll hit 37 by April 20th. And what it will do is it will show you how each one of these strategies will perform based on your view that you think that this stock's going to go to 37. So here, as you can see, if I bought the stock, I make about a 14% return. If I bought this call, I make a 92% return. And if I bought this call spread or the vertical, I make 138% return. Okay, so this allows you to very quickly decipher based on what your views on the underlying stock is, how each one of these strategies will perform. This will also tell you that if you think the stock's going to only go to, let's say you think the stock's going to go to 34, meaning you're not that bullish. As you can see here, if you bought the stock, you make a 4.5% return. If you bought this call, you actually lose some money. You lose 23%. If you bought this call spread, you lose 4.76%. So this not only tells you when the strategies will be profitable, but more importantly, it will tell you when the strategies aren't profitable. So this will help you avoid buying this call if you don't think the stock's going to move that much. This is designed to help you know what you're getting into before you get into it and not have to figure that out after you're in the trade. And lastly, what happens if the stock drops down to 28 bucks? How much money do you lose? This is important to know these things. This is what I'm talking about, planning your trade before you get into it so you know what are my potential rewards and what are my risks. Here, if the stock goes down to 28 bucks, I lose 450 bucks if I had bought the stock. I lose $260 if I had bought this call, and I lose $210 if I had bought this call vertical. So this allows me to plan out my trade both from if I'm correct, what are my expected gains, and if I'm wrong, what are my expected losses, okay? So use this tool, type in a stock, look at whether you're bullish or bearish on the stock, click on I'm bullish or click on I'm bearish. We'll present to you strategies. You don't have to go and pick something. We'll present these starting points for you. Then use the P&L simulator to say what happens if the stock goes higher, what happens if the stock goes lower, what are my expected returns so that you can quickly understand whether this is a trade that's for you or not. One thing I do want to point out here is for those of you that are looking at these strategies, if you decide, hey, this is a strategy that's interesting to me, I think I want to trade this, hit the trade button, because what we do is we have what's called a strategy checklist. This is designed for those of you that are brand new to options trading and need to make sure that you understand your risks before you place a trade. The strategy checklist will go over a few different things just to make sure you're trading with the trend of the stock, you're trading with the trend in the market. We check the OptionsPlay score to see if it's good, if you have good risk reward on this trade. We check for earnings date to see if there's earnings between now and expiration. And lastly, we check spread and liquidity. So we check to see how liquid an option is. This is something that you may not have to be worried about when you're trading just stocks, but it's something you certainly have to be aware of when you're trading option, is how liquid is something, so that you know that before you get into a trade and not after when you're trying to get out of the trade. So if you decide that this is a trade you want to do, it provides the details for you on how to enter this trade into your broker's platform. So it'll tell you exactly how to enter that order. It will even tell you the current bid and ask price and provide you with some analysis as to where you can place your order. At the bid price, mid price, or ask price, it'll provide you with some analysis as to where you can place your limit orders. So that covers very quickly just how you can use our platform for either a bullish or bearish view. So if you're bearish, it'll always present you 3 bearish strategies. Again, gives you that starting point so that you have something to look at and decide whether it's suitable for you based on your given outlook on the underlying stock. So now what I really want to do is jump towards the income tab. So this is probably where many of you will start out, especially if you're brand new, is selling cover calls against the stock that you currently own, because many of you probably already have the stock. So this is a strategy that you can deploy immediately. And all you have to do is set up a watch list with all the stocks that you currently own. And what we do here on the income tab is when you're selling cover calls, each one of you are going to be a little different, meaning there's different minute difference. There's personal preferences that you each have. So one of the things that we offer here, and you can click on the income settings here button at the very bottom of the income tab. This allows you to set your personalized settings for selling cover calls. And for those of you that are a bit more advanced in selling cash secured puts, you can do this as well. And the settings are, it allows you to choose a time frame that suits your time period. So generally, if you were an active trader, you want to choose shorter expiration dates. If you're a long-term investor, you want to choose longer dated expiration dates. So you can choose what your preferred time frame is. You can also choose your risk tolerance. So you can choose aggressive, conservative, or optimal. So because I trade fairly actively myself, I choose short-term because I can look at my account fairly often. And when it comes to risk tolerance, I choose optimal because I'm trying to find a balance between risk to reward. For those of you that are looking to maximize yield, you can choose aggressive. For those of you that are want to minimize the risk of losing the stock, you can choose conservative. Whatever your choices are, you can make those choices here, save them as default. And what we do here at OptionsPlay is instead of having to pull up that option chain every time you want to sell a cover call, you have to go here, search for the expiration date. So let's say you want to go out to April. You have to then choose a strike price. Let's say you choose the, 38. Then you have to look at how much it's trading for right now. It's trading at 90 cents by 95 cents. Then you have to calculate how much yield is that on the trade. So there's a lot of manual work that's required in order to just find the right starting point. What we do here is we do all of that work for you. You can simply type in a stock. Let's take a look at, what's a stock here that we can use. Let's look at TELUS. So this is probably a stock that many of you may have in your account. So as you can see, TELUS here, what it's telling me is that it cannot find me a cover call that suits my preferences. So this is actually also designed to save you time, because a lot of times you search through an option chain, you go through all the expirations, you go through all the strike prices, and you basically then find out that there's maybe not enough premium on the cover call, or there's just not enough yield on a cover call. This is designed to tell you immediately, hey, we cannot find you based on my personal preferences, which is short-term optimal, what a cover call that meets my criteria is. And what this does is it saves me a lot of time. I can basically say, look, there's no cover call opportunities or no income opportunities on the stock. Let me move on. I don't have to search through the chains to figure that out. Let's just move on to the next stock. Here, L, trading at 66.96. It'll ask you, do you own shares of L? You can enter the number of shares you own. Let's say you own 300 shares of the stock. What it does is it breaks this trade down for you in plain English. So for those of you that have never sold a cover call before, this tells you that by selling the April 20th, 70 cover calls, you'll generate $72 in income. That'll produce a 3.4% annualized return on this call and gives you an 83% chance that this call is going to expire worthless. So what that allows me to do is very quickly see, hey, this stock currently pays me a 1.62% dividend yield. So I'm earning 1.62% if I own the stock. By adding a cover call, I'm adding an additional 3.44% on top of that, which brings my total 12-month yield to about 5%. So I'm increasing my yield from about 1.6% to about 5%. That's why typically this is one of the most popular strategies, especially amongst beginners, because this is a strategy that you could immediately do on the stocks that you own in your account. Let's take a look at another popular stock, BMO. Trading at 98.22. Again, this is telling me, hey, there is no cover call opportunity. We had to go all the way out to July before we were able to find anything with some premium. This again saves me a lot of time. I don't have to pull up that chain, go through all of that, and then decide there's no opportunities here. Let's look at Canadian Pacific, another stock that many of you may have. So here I get the green check mark that's telling me it was able to find me a cover call. So let's say I own 200 shares of this stock. it tells me immediately that I can earn $262 in premium, which is a 5.44 annualized percent yield on a stock that currently only pays me about a 1% dividend. So if you own this stock, you're getting a 1% yield, which is not very attractive. You can add an additional 5.44% to it by adding covered calls to it, which brings your total yield to 6.2%. That's why this is a strategy that's very, very popular amongst beginners, because it doesn't require you to add any additional risk. Like when you're buying a call or a put, you're adding additional risk to your portfolio because you're risking the amount of money that you're buying that call or a put with. When you're selling a covered call, you don't have additional risk. You're actually bringing income into your trade. So this allows you to very quickly set up, a watch list of all the stocks that you own, click on a symbol, and within a few seconds know where is the cover call opportunity for you to get started with. And all of these cover call ideas in terms of expirations and strike prices are driven off of your own personal settings, because you can create your own settings here at the bottom. And even if you want to make some minor adjustments, we can show you the different spectrums. So we can look at short term, what are the available cover calls, the medium term, what are the available cover calls, and long term, what are the available cover calls. And it'll present them to you very quickly, so you can say, what happens if I want to go out to May? What does that look like? Or if I want to get more conservative, what does that look like? How much premium I'm going to get? And you can do it all with the click of a mouse. And once you've honed in on a trade that you want to place, click on the trade button. Brings up the same thing, a strategy checklist. This is designed to help you guys better understand the risks that you're taking before you place that trade. Make sure you check this, especially if you're a beginner. Make sure you understand if you see a bunch of red dots, that means there's a lot of things that aren't matching up. You want to make sure you understand that risk before you place that trade. And once you're ready, just enter that trade into your broker's platform by following the instructions on the top of the trade ticket. So with that, I just want to sum up real quick. This platform is designed to make your learning experience, if you're brand new, hopefully a little easier, so that, because we present ideas to you to start, you don't have to go searching for it on the option chains. And for those of you that are currently trading options, I hope that this platform makes your life a little easier, because it presents ideas to you as a starting point. It allows you to quickly compare one strategy to the next. And just one last thing I want to show you guys. If, let's say, you're looking at a trade and you want to modify it, meaning you want to change the expiration date, you can do that. You can select any expiration date or any strike price. It's all available here. You just click on the modify button. It'll allow you to change the strategy, or you can even change the strategy completely. So for those of you that are a bit more advanced and you want to trade calendars and diagonals, you can do that by the click of a mouse, just using the strategy constructor. Select the sentiment, and you can select the strategy immediately. So if you want to trade a credit spread or a condor or all of that, all of these strategies are available to you. And you can quickly move the strikes up or down one by just clicking on the left and right arrows. So you never have to deal with the drop-down menus all the time when you're trying to change the strike prices and expiration dates. So with that, like I said, this webinar is recorded, so if you're brand new, I highly recommend you take a look at the recording and make sure that you understand what we covered on the slides. And also, come back to the video so that you can quickly learn how to set up this platform so that you can quickly identify whether a stock is in a bullish or bearish phase, and then more importantly, how you can quickly leverage that into either a trading opportunity or an income opportunity for those of you that own the stock in your account. So with that, what I'll do is I'll open this up for Q&A. If you have any questions, please just type them into the chat window and I will answer them in that order. And I want to thank you guys for taking the time this afternoon to view this presentation. I have one question here. Sam's asking, can I forward the share replay video to a few of my friends? Absolutely. You can forward these replays to as many people as you want. We'll basically send you a YouTube link after we're done, and you'll be able to share that link with whoever you'd like. For those of you that are brand new, that have never used OptionsPlay before, you can sign up for OptionsPlay at www.optionsplay.com/TMX. Our foreign currencies are eligible for TFSA. I'm sorry, I'm not sure what TFSA is. If you can clarify for that, that'd be great. Do trade ideas only refresh daily? Absolutely. The trade ideas are only refreshed once a day, and they happen around 8 p.m. at night every day. Bruce is asking, can you look at weekly options? Absolutely. Every single option that you can trade is available here. We don't differ between weekly and monthlies. So depending on the stock, not every stock has weekly options, but the ones that do, every single option that's listed, you can trade here at OptionsPlay, or you can at least analyze using OptionsPlay. Pierre is asking, I'm bearish on a stock, which is currently $30, and I anticipate it will rise to 40 by next year. I think you mean you're bullish on a stock. If that's the case, then what you would typically do is you can buy a call. So, and you can, if you're bullish over 1 year's period, you just want to select a long dated option. So let's say BMO, I'm just using this because it's around $100. It's always easy to use. So if you're bullish on the stock, you can always click on modify, change the expiration date. So let's say you want to go out to January 2019 or even January 2020. You can do that because here, as you can see, to buy 100 shares of this stock right now costs you $9,800. To buy, let's go a slightly deeper in the money call. Let's say you buy a $90 call, which gives you a similar risk profile to owning the stock with less risk, only costs you $1,100. So that's why, if you're bullish on a stock long-term, you can always consider buying a deep in the money long-term call because it gives you the same upside exposure with limited risk on the downside. So if the stock goes down to zero, you're only risking $1,100 versus risking $9,800, and you get unlimited upside for buying this call. And you can sell calls against that as well. So if you can sell cover calls against a long call as well. So that will also help decrease the cost of buying this at the money call, or this deep in the money call if you have a long-term bullish view on the stock. Pierre, if you have a long-term view on a stock and it's trading at $30, you typically want to buy an in-the-money call, not an out-of-the-money call. So my suggestion to you is instead of buying a $32 strike, you might buy a $28 or maybe $26 strike, in my opinion, because then you have less time decay working against you. Bruce is asking, you have other webinars available? Absolutely. We actually have a whole playlist available for all the OptionsPlay Canada recorded webinars. I'll send the link to that with the recording tonight. So for those of you that want to view some of our other recordings, you can view it there. Mark is looking at, I was looking at BNS today. Let's pull up BNS. I was looking at BNS today. OptionsPlay recommended I buy a call at 182, but in my broker's platform, it showed the bid ask was 201 by 205. Do I put a limit price of 182 or do I choose 203? Well, are you sure you were looking at the exact same strike prices then? Because you shouldn't see a difference in pricing unless the difference comes down to the fact that one is delayed and maybe one is real-time pricing. I would always go off of the real-time pricing if it comes down to being delayed. But as long as you're sure that you're not looking at the different strike prices, for example, like a 78 instead of an 80. But if it comes down to just a timing, then I would always use the real-time prices to decide where you want to place your limit order. Pierre, this is where I'm saying if you're buying an in-the-money call, a deep in-the-money call that's long-term, that is one of the few cases where you might want to hold on to a call until maturity. But that's up to you. If you feel that you think the stock's going to keep moving higher and you're in the money on that call, you can continue holding on to it. But that's why you want to buy deep in the money calls so that you decrease the time decay that's working against you when you're long that call. Roman's asking, should I have to open an account at TMX to use OptionsPlay? So no, you don't have to open any accounts anywhere. You just go to optionsplay.com/TMX. Let me see if I can bring this. Oh, sorry. Let me bring that back up. Share screen. Sorry about that. Let me just try to bring up that website here. You can go to optionsplay.com/TMX. For those of you that do not have access to this platform, it's free of charge. Just go to optionsplay.com/TMX and you can sign up for the platform that I'm showing you guys here today. Rose is asking, is your options platform as presented also a broker? No, we are not a broker. We are simply just an options analytics platform. Like I said, if you're viewing a strategy on our platform and you want to place a trade, just hit the trade button here and it will present to you the details on how to enter this trade into your broker's platform. So we unfortunately am not plugged into any Canadian brokers yet, but we are looking at doing some of those deals in the future. We are in talks with a few of the brokerage firms to integrate our platform directly into some of the active trader platforms in Canada. Philip, yes, it's the trade ideas are updated around 8 p.m. Eastern every single day. So you have fresh ideas for the next day at around 8 p.m. Mark's asking, what's the difference between the options play symbol and the check mark next to the score? Great question. Let me see if I can bring up an example of this. So here you have a check mark next to the options play score. This is really just telling you which strategy has the higher score. That's it. Very rarely or very occasionally, you will get, instead of a check mark, you'll see an options play score. And that's what Mark is referring to. I don't have an example of this here right now, but what the options play logo means is that if everything on the strategy checklist is green, that's when you, instead of getting the check mark, you get the options play logo. So it's just saying that not only is this the highest scoring trade, it also meets every single criteria on our strategy checklist. That's when you get the options play logo. Great question. I have a question here asking, what is a vertical call and how to do it? So a vertical call is actually fairly simple. So here I have just a call. So buying an April 20th 32 call on wheat. A vertical is simply what you're doing is you're at the same time buying a 32 call. So it's just like buying this at the money call, but at the same time, you're going to sell a $40 call against it. So instead of just buying the $32 call, you're going to sell a $40 call against it. And what that does is to buy the $32 call, it costs you $2.60. To sell the $40 call, you're going to collect 50 cents. So what that does is it brings your cost from buying this trade from $2.60 down to $2.10. And this does a couple of things. By reducing the cost of that trade, what you're doing is you're reducing your risk because your risk is limited to how much you're paying for the strategy. So here, when you're buying this call, you're risking $260 per contract. When you're buying this vertical, you're only risking $210 a contract. So you're lowering your risk. And what that means is also when the stock goes in your favor, you make a higher return because it costs you less to enter the trade. And lastly, what it does is because, as we said, when you're long a call, time decay is working against you. By selling that $40 call, you're actually offsetting some of that time decay because you're long one leg, you're long the 32 calls, which you're losing money to time decay on, but you're short the $40 call, which you're gaining time decay on. So it just offsets that time decay factor when you're trading a vertical. And that's why this is this is my favorite strategy when you're trading options, because it provides you all of those additional benefits compared to just buying a call or a put that really make options trading potentially a lot less riskier and a lot more profitable if you use them correctly. So this is the strategy on the right that I use the most when it comes to trading myself. And if you're starting out with options, start with the call. But as you learn about trading calls and puts, I highly recommend you just start taking a look at that vertical because it does provide some additional benefits. Sam's asking, I have a TD web broker account. If I click on the trade button, does it take me to TD web broker? No, it does not. So when you click on the trade button, it populates this ticket for you. And what it does is it tells you how to enter this platform into your broker's platform. So when you're on TD, this is how you can enter the order directly into your TD account. Bruce is asking, can I ask for different technical indicators on the stock chart? Absolutely. So If you click on expand for the chart, we have a whole studies. So you can have popular studies. I think we have about 85 different technical indicators here. So you can add anything that you like. So if you want to do Chaikin money flow, you can just add that directly to your chart. And you can remove them by clicking on this little X button on any of these strategies. So you just click on the expand button and you can add technical studies that you like to the chart. Rose is asking, is there a similar platform for the US? There absolutely is. So you can go to OptionsPlay.com. You can sign up for a free trial. We have a platform exactly like this that you see here, but with US stocks and options. And again, you can go to OptionsPlay.com to sign up for a free trial for that. Mark's asking, what is the best options play score to look at, over 100, 110, or higher? So it's, we color code the options play score specifically for this so that you don't have to memorize what's good, what's bad. Green is good, yellow is average, red means bad. So basically anything over 100 is green. So that's typically what you want to look out for when you're trading an options trade. But I do want to point out that just because this score is a 96 and is yellow does not mean that you can't trade this, because if you're correct on your analysis and wheat goes up to, let's say, $37, you're still making a 93% return by buying this call. It doesn't have the best risk to reward ratio, but I think that's still sufficient for most people to make a 92% return if the stock goes back up to 37, which is, I think, in this particular case, a fairly modest move in this particular stock. So keep in mind that you want to take a look at how much return you're going to get, because that's really more important for most people than simply just the options play score. Roman, thank you. I hope you found this useful. Are brokers' commissions factored into your yield numbers? No, the yield numbers are not factoring into any transaction costs for this. This is all just assuming that you get filled at the current price. What is the cost to use the platform? The TMX version, which is the one for Canadian securities, is completely free of charge, which is why I highly recommend, for those of you that are trading options, go and sign up. It's free of charge to you. Go to optionsplay.com/TMX. It's free of charge. The US site, if you want to use this for trading US listed options, you can. It's a 30-day free trial, and it's $50 a month afterwards if you're interested in looking at using this for the US platform. I have a question. Do I have to own the stock before making a vertical call? Absolutely not. You can trade a vertical call without owning anything. You can just buy that vertical call. You don't need to own anything. Sam's asking, do you have Heikin-Ashi candles? So currently we do not have them. It's something that we can see if we can add in the future, but currently we only have candlesticks, bar, and line, I believe. Yep. Do you have an options chart, just like a stock chart? If you're asking for the price of the historical price of the option, no, we do not. We simply have these P&L graphs here on the right. Do you have a webinar for protective puts? When and if any? So we typically don't do ones on protective puts, but we can certainly add that to our speculative trading webinar next, which is simply just buying a put against the stock that you own. So if you own 100 shares of the stock, you might want to buy a protective put to hedge against any downside exposure. That might make sense, but keep in mind that buying a protective put is really the same thing as buying a call from a risk perspective. So if you're looking to just get into a trade and you want to take a similar risk profile, you might want to just consider buying a call instead of buying the stock and buying a put. Protective puts are really for those if you already own the stock position, you want to hang on to it, but you think the stock's going to drop lower. You're simply just buying a put to buy some protection. I don't believe you can trade a vertical in a registered account. So I don't have the information for that, unfortunately. I'm not as familiar with Canadian securities laws with registered accounts. So that's a question that you should ask your broker in terms of what you can trade in what account. Sam's asking, how do you get to the US platform? You can go to optionsplay.com and sign up for a free trial right on our homepage. So just go to optionsplay.com and you'll see a button here in the middle that says start your free trial. Just click on that and you'll be able to sign up for the options trading side for the US. Oh, sorry. Any more questions? If you have any questions, please type them into the chat window. I hope you guys have found this webinar useful. For those of you that are brand new, I hope this inspires you to take a look at options, whether you're trying to take a speculative directional view on a stock or if you're looking to generate some income. I hope you find this useful. And for those of you that are trading options already, I hope this helps make your life a little easier, helping you find the right starting points, helping you make the right analysis before you get into a trade so you understand your risks and rewards before you get into it. Like I said, this webinar is recorded, so please, when you're done here, take a look at the recording. I hope you guys pick up a few new things when you watch the recording. Mike's asking, when you're trading a vertical spread, would you pay commissions for both trades? That depends on your broker. Most brokers that support multi-leg trading would not, meaning they would just be one ticket charge for all two legs. But I know that there are some brokers that force you to trade them separately. So for those, you may be trading both. So again, that's a question for your broker. Unfortunately, I don't have the answer for you on that one. Any more last questions? If not, I want to thank everyone for taking the time out this afternoon. Thank you for everyone that said the kind words. I hope you guys found this useful. Like I said, this recording will go out later tonight. You'll get an email from us. I'll shoot you the email with the link to this specific recording. I'll also send everyone a link to the pre-recorded webinars that we've done before. And also sign up. I'll also send in the sign up links for those of you that do not have access so that you can sign up and start taking a look at this great platform. Thank you everyone for taking the time out this afternoon. I hope you guys have found this useful, and I hope everyone has a great afternoon, and I'll see you at the next webinar.